I just threw $24,000 into this stock, and I truly believe this is a triple M, a money making machine. And in this video, we're going to get into why I believe it is so strong of a company, what really drives this business to higher highs, what we should be looking out for, some of the risks, and what you might want to be doing with your portfolio, and just making sure that you're looking at a company just so it goes on the radar. Not saying to buy it or anything, but just to look at it. So this is not financial advice, of course, and make sure that you guys leave a like and subscribe to the channel. Thank you guys so much. Let's get right into it. Now, the company I threw all this money into is Crocs, ticker symbol CROX. Now, I have about $24,000 in cost basis, and I'm currently down 2.8K. So my current value is about 21.2. That's about a 12% loss so far in these shares. And I gotten into them when they announced earnings maybe a quarter or two ago, probably about 2 or 3 quarters actually. And we've only seen it come down and down because of lower guidance, and we'll get into that. But this past week in September, I've been buying thousands of dollars of Crocs, $2,000, $1,000, another $1,000. And I just can't get enough of this stock when it just keeps dipping down lower. Could it be a value trap? It could always be a value trap. But we're going to get into why I truly believe this company has higher upside. So if you guys don't know what Crocs does, they're essentially a company that has little clogs. They call them cross-slide clogs. And they have a bunch of holes in them that people like to wear on their feet. So these shoes are essentially the best shoes for kids to have, because kids, you know how hard it is when you have a kid to put on their shoes, making sure that they keep them on, and having something that just gives you a little bit of a break when you are a parent, because sometimes getting those shoes on are the hardest dang thing ever. So they sell a bunch of these shoes, and I'm sure you guys have seen them all around anywhere. They have a lot of holes for gibbets, and gibbets are these little add-ons, essentially like skins for your shoes that you put onto your clogs or your Crocs to make sure that you are stylish and that you're up to the date trends and you are part of a movement, or you have some cute little figurines that are on there. So nonetheless, this company has so many collaborations with other corporations as well. So like there's a Hollister collection, South Park, there's Nightmare Before Christmas, Animal Crossing, and Monsters Inc. Like so many partnerships that you wouldn't even imagine that they have either a collaboration with the brand itself to integrate some kind of Barbie design onto the shoes, or they have the gibbets as well that you can put Barbie dolls onto, not Barbie dolls, but Barbie doll pictures of little things onto your Crocs. Other than that, there's so many things that are yet to come out that we just haven't seen yet. Like I believe this NFL one was supposed to kick off, get it, soon. Actually, kick off already because NFL started. But there's all these teams. Imagine all the kids that are into football nowadays, or just regular grown men like me that just want something to walk around nicely, represent your team on a cool Sunday. It depends on the market, right? Because me, I'm kind of cheap. So I've bought one pair of Crocs in the past, and I kind of just wear them forever. I know there's a bunch of people that probably are the same, but they'll buy these gibbets to put onto their Crocs just because they like new things. They like trading them in, they like trading them out. Whoever buys Crocs is either one, they like it for like a leisure shoe to walk around the house, walk around the backyard, or just go run errands with. Or two, they have kids that they want an ease of life with. And three, they might be just gift giving. I could see Crocs as a nice gift to give for Christmas, and little gibbets to, match with your friends. But there's another part to Crocs that you don't know probably, which is Hey Dude. They actually acquired this business for about $2 billion-ish, and it's been a disaster so far. So far, they've taken a loss on the revenues every single quarter, and it just hasn't paid off for them. They haven't gotten that value back to where they even had to go into the accounting side of their balance sheet and actually write off the loss of the goodwill that Hey Dude has hit. So they're saying that like, hey, we actually haven't gotten the return from Hey Dude. Let's write off $737 million. And that's just going to hit us one time, so we don't have to keep amortizing or spreading out this cost over the span of the next couple of quarters. Let's just take the hit now. So if you look at valuation metrics, you would see that Crocs as a whole company is pretty elevated, but it's due to the write-off of Hey Dude. And once you understand that, you can conceptualize like, hey, this high valuation isn't going to stay this high valuation, and you shouldn't look at it just as like, oh, it's a 20 something ish PE. Calm down and look at the forward basis and like where we will be in the forward terms. But before I get into financial metrics, I wanted to bring your attention to this new CFO that is going to be coming into the company. Hey, Triac Reagan. I'm going to call him Reagan. Reagan is a new person that is coming from previously Nike, a Nike alum, and this is exactly the person that you'd want to see into Crocs. Like, you have a guy that comes from a shoe consumer discretionary based background that has skin in the game of wearables on your feet, as well as brands that have partnerships with other influencers, athletes, and just big brands as well, to kind of drive or bring those ideas, those fresh ideas to Crocs. Like, imagine we can get whatever Cat's Eye did with Gap, or imagine we can do a Sydney Sweeney with American Eagle, though we got her for Hey Dude and it worked out really well. But we need another one of those really good campaigns for Crocs. If Crocs can pull off a nasty campaign and get more sales driven to the NA, North America region, then I think it's pretty smooth sailing from here. And of course, that costs money. Do we want to spend it? Sure. I think you got to spend money to make money, right? So at the end of the day, I do like this move to get this CFO, and I do hope that it does pay dividends. They will be starting on September 22nd, so we have a little bit of time to see what this new CFO can cook up by the next meeting that they report earnings. All right, now looking at Crocs holistically, over the past year, they're down about 36%, which intrigues many value investors to come into this stock given that they have generated so much free cash flow. But before we get into that, this revenue has been pretty stagnant, like 2 to 3% growth, but that's all you really need because the margins are so good. We're talking 60 to 70% margins on cross-site material. But a lot of this is sourced overseas, which is why the tariff impact is going to hit them pretty hard. So that's something to consider when being an investor here. The PE looks like 21 right now, but that is not artificially, but it's inflated due to the Hey Dude acquisition write-off. And the price of free cash flow, you're getting a pretty good deal here. You're getting a 6. Historically, where has this price of free cash flow been in the past? You could see it anywhere between 10 to at the low 7, as high as 22. So that's just the value that investors are giving for this $700 million of free cash flow. While being a $4 billion company, it's actually quite incredible. Look at this free cash flow year over year. They've been able to grow it almost, I want to say, what is this average? Probably like the 20%ish. And they're buying back shares insanely. They've dropped so much, and they have like this agreement to buy back $1 billion of shares in the future. So I only assume that they will keep buying back these cheap shares because it makes so much sense to buy back shares while they're cheap, get that shareholder value, and just increase the money that goes back into shareholders. And of course, all of the executives have a financial incentive to create a stock price that is going higher. On a forward PE basis, this is about a 9. So given that it's about a 9, we actually expect the earnings to be okay. I think in the past quarter, they decided and they gave guidance out that revenues might actually be down by anywhere as low as like 9 to 11%. Don't quote me on that, but around 11% at the worst. And those are really driven by two main things: tariffs, 1, and 2, weakening sales. You have almost a 50-50 split where it's like 55-45 split, where 55 comes from international markets like Korea, China, anywhere in Asia really. and you have about 45 coming from North America. So 45 of the business comes from US, Canada, and essentially the entire business as a whole, they're selling two products, right? The clogs from Crocs or the Hey Dude shoes that are kind of like if Sperry's were to get into like tennis shoes. If somebody gave me these, I would wear them. And like no questions asked, I would wear it because it's free. But I don't think I would go out of my way to buy this shoe for $80 and wear it unless it is insanely comfortable. But I just don't have the desire to as a like working professional. So I don't think that this brand, maybe I'm not the target market, but maybe this brand isn't going after me. I don't think they will go after people in my age demographic, or maybe they might, depending on who influences it. But they're probably targeting anywhere between like 30 to 40, maybe 50-year-old males and females. And at the end of the day, they just need to increase sales for Hey Dude because either they let it go or they bring it back. All right, and I want to bring you into this valuation calculator of free cash flow. So this is essentially a discounted cash flow model that is going to predict where the stock will be in 5 years. So right now it's at $81, and at a 7% free cash flow growth, this is my like conservative estimates, and they're buying back 2% of their shares every single year. Price of free cash flow of about 10. I want to say they will be valued of 10 for a price free cash flow basis, just because you look at Skechers, which is about probably 30, I think, and you look at Deckers, which is probably about the same. And these companies are given so much value based on the amount of free cash flow that they generate in. And I personally do think that Crocs has a moat or a really strong business to sustain this cash flow over time. Like this cash flow is nothing to sneeze at. They are creating so much free cash flow every single year, $900 million last year. And I expect this year to be $1 billion. It doesn't surprise me if they hit $1 billion in free cash flow this year. I think they're on track to hit that. It only makes sense that these estimates are pretty much our base case, or if not our bear case. So fair value today, we're about 40% undervalued. And if the market does re-rate the stock, give it a higher valuation of, let's say, a price of free cash flow of 12, we're undervalued by 70%. This company makes so much sense to throw money into as long as they can maintain their cash flows and not lose and burn money while they're at it. So this strategic team behind it, the CEO, CFO, everyone in the company needs to lock in and make sure that they're able to sell really great products and not see. Right now, the problem is that they're not giving so much promotions because they don't want to lower their margins. And if they lower their margins, then they just look like a weak competitor to everybody in the industry. Sometimes you do have to take a margin cut though in order to get higher volumes, but I guess that would suffer the brand. Like the brand would suffer. So it really comes down to executive management of what's going to be the better outcome. Do we want higher sales at lower margins, or keep higher margins with lower sales and try to drive and maintain that? Obviously, we want the higher margins with more sales, of course, but that's going to have to come with a price. And that price needs to be a marketing campaign, I truly believe, of some sort that is going to be revolutionary, or doesn't even need to be revolutionary. Just be good enough to grab enough eyeballs or catch on to trends that, like make gibbets of memes or something. Maybe people will buy that. But we need to keep innovating, and that's the way to progress and growth in any company. Now, the one thing that does concern me is the civilian unemployment rate. If we look at civilian unemployment rates over the past couple of years, it really spiked up in 2020 when the entire COVID crisis was happening, and it dipped very low. But lately, it's been climbing up to 4%. And with unemployment rates climbing up, it really makes us wonder, like, what discretionary spending will people have in order to buy nicer things? If unemployment keeps going up and up, people will not have discretionary spend to buy just leisure shoes that cost $50 to $60 to $70. It doesn't make sense. So I think something to track is unemployment rates, and it's truly linked to discretional spending on how much we could spend on a extra basis, because there's going to be bills at the end of the day, there's going to be rent, there's going to be food, and the last thing that people are thinking of is buying Crocs when they're about to lose a job, or the market has come down to shambles. 4% doesn't really scare me too much, but if this does start getting higher and higher, maybe to like 5, 6, 7%, then the market just doesn't have a demand for discretionary spend products like this. And you could see the exact same thing when it comes to Lululemon. You have a premium product that people love, and over time, people just stop going to buy these products. Just is it because one, they sacrifice quality, or is it two, it's just too expensive, and or three, there's too many competitors? Who knows? I do think that Crocs does have an edge, and they will be able to overcome this period in their time. And I am very hopeful that this new CFO Reagan will come around and change the business. But overall, those are my thoughts on the company, and I am continuing to buy shares when they are this cheap. But I do have to realize the risk and manage my risk to not let this position grow to an outsized or outlandish number that I don't need it to be at. So, taking into account of, I want my position to be a little bit bigger, but I won't go fully all in this moment in time, at least, until things change. But overall, I think this is a great value play, and I think investors will be rewarded very nicely for this. Of course, make your own investment decisions, and this is going to be very exciting for all of us to see. Let me know, do you guys own any Crocs stock? And if you guys are buying any stocks, let me know down below in the description. If you guys made it to this far in the video, please give this a like. It means the world. And thank you guys so much. Peace out.